And so I think right now what you see in the economy is lots of distortion of numbers, lots of distortion of metrics. Right. The fact that we have a debate over whether we are in a recession or not is kind of laughable, right? Because we've been in a recession for 24 months. If you were measuring the production of goods and services, all you got to do is look at the variety of things that were available to you in January of 2020 versus the variety of things available to you today and the delays. If you've got 1/10 the selection and it takes 3 times as long to get it and it costs 20% more.
The value of Bitcoin is fluctuating wildly. In November 2017, one Bitcoin was worth $68,990, making it the most valuable cryptocurrency in the world. Right now, it's hovering around $19,000, which is a staggering 72% drop from its all-time high. Despite this, the Chief Executive Officer of Microstrategy, Michael Saylor, is optimistic. In fact, he not only foresees a recovery for the cryptocurrency, but also anticipates a significant amount of growth over its previous peak. Hello and welcome to Crypto Castle, where we explain everything crypto. Our channel focuses on cryptocurrency, business, the economy, and anything else that might enhance your financial knowledge. We strive to make instructive, informative, and entertaining content for you. So do not forget to subscribe, press the bell icon so you don't miss any of our recent videos. In today's video, billionaire investor and chairman of Microstrategy Michael Saylor updates about the key factors behind crashes associated with crypto and other markets. His thoughts about policy wars and their impact on inflation and why he believes the current policies are suppressing the free market. If you like this video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So, without wasting any time, let's dive right into this video.
Well, if we look at the past year, what you've got is a drawdown of all financial assets. So the NASDAQ is down about 22% over the past year. And so NASDAQ represents tech companies and all the risk assets. But on the other hand, if you were to go and look at like the bond market and the bond portfolios, bonds are down, like the BOND index, the long bond index. It's down almost 17% in the year. So for 30 or 40 years, you had this 60-40 bond portfolio. And the idea was
bonds were considered a safe space.
The idea was if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds and the interest rates will go down. The bonds prices will go up and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to 0. So after we had lowered interest rates from 5%, 5.5% to 5 to 4.5 to 4 to 3.5 to 3 to 2.5 to 2 to 0 and left it at 0. Then the debate was, can they take interest rates negative? If you can't take interest rates negative, then bonds don't act as a hedge to stocks anymore. I mean, you're at the end of the road for bonds. And what we saw with stocks is the Federal Reserve printed a bunch of money, pegged interest rates at 0. And then you saw all these risk assets explode. You saw the NASDAQ explode up and the S&P explode up. You had a K-shaped recovery. And in the K-shaped recovery, it's almost like the entire economy was in a train wreck or in a car wreck. And we got taken into the hospital and they pumped us full of morphine. And if you've ever been in a bad accident and then first you're in pain, and then they pump you full of painkillers, and then you actually feel pretty good. And you're sitting there and your arm is broken, but you're high on morphine or high on something, and you feel pretty good about it. And you're thinking, why don't I just go break my arm and do this all the time? And then at some point, there's part of your brain that says, I'm going to come home from the hospital and I'm going to get off this painkiller and I'm going to be in great pain for the next 3 months or 6 months or whatever it is.
Michael Saylor also stated that he believes the next logical step for Bitcoin is for it to replace gold as a non-sovereign store of value asset. At the moment, gold is an asset worth $10 trillion. Bitcoin is known as digital gold, and it's 100 times more valuable than gold. You won't be able to blow it up. The value of money held in Bitcoin will never lose half of its value. It is possible to move it at the speed of light on billions of computers at the same time. the price of Bitcoin were to reach that of gold, then each coin would be worth $500,000. And I believe that will happen within the next decade. Given the current state of the Bitcoin market, a price of $500,000 indicates that there's room for growth of more than 2,500%.
I think what happened here is the Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And I remember when Jerome Powell said, "I'm not even thinking about raising interest rates," and said strongly that it'll be till 2024 before interest rates start coming up again. But here we are in 2022, and now instead of raising them a quarter point, each time, now they're raising them 75 basis points. So they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history. And now we're jacking up the cost of money faster than any time in history. And the result is that all the traditional models are broken. Let me give you a 2-year post-mortem since we started dealing with this issue. Microstrategy had a $500 million of cash, and we saw interest rates at 0, and we saw the stock market inflated in the summer of 2020, and we said, well, what are we going to invest in? And we looked around at everything. Should I buy gold? Should I buy land? Should I buy art? Should I buy some crypto asset? And what's going to happen next? So what we did is we decided to buy Bitcoin, and we bought $250 million of Bitcoin August 10th, 2020. And then around September 10th or so of 2020, we bought another $175 million of Bitcoin or something like that. And then we started buying Bitcoin more in December, and we kept buying Bitcoin. We ended up buying nearly $4 billion, $3.97 billion of Bitcoin.
Saylor is demonstrating that he's willing to put his money where his mouth is. He claimed that he had 17,732 Bitcoins in his personal possession, which he had for about 2 years and had purchased for around the $9,500 range. His company, Microstrategy, is estimated to have acquired approximately 130,000 Bitcoins at a total cost of approximately $3.98 billion. Despite this, it's highly unlikely that the route will be a straight line. I think this is the decade where Bitcoin institutionalizes from 2020 to 2030. He says, adding that it'll be a wild ride. I think this is the decade where Bitcoin institutionalizes from 2020 to 2030. If you agree with Saylor's perspective, then the information below will help you become familiar with this cryptocurrency. Now, before we move ahead, please take a second to like this video, subscribe to our channel so that we can keep bringing more up-to-date crypto content for you. Your little contribution means a lot for us.
When a government declares a war, they basically put public policy initiatives ahead of the interest of the free market. Right? So if I declare a war, I could just draft every single adult in the country, put them in the military, send them off. And if I lose the war, they're all dead. Right? What's it do to the economy? The economy crashes. Right? What's it do to the prices? Well, the price of everything go up. If you want to create inflation, you do it a couple of ways. Either you cut the supply, or you cut the supply of the product you want to buy, or you increase the supply of the money that's available to buy it with. So if I make it illegal to manufacture food, the price of food's going up. Right? I don't even need to print more money, right? I can create inflation just in a war, like in World War II. We have gas rationing. You have food coupons. Why? Because all the gasoline gets shipped off to Europe to put in tanks or to put in airplanes or put in ships. So when you have policies that are declaring a war on something, you divert resources. So we had a war on COVID. We have a war on carbon, an energy war. If I decide I don't want you to burn coal or oil, then I drive up the price of energy. If I decide I don't want you to show up in your office, I drive up the price of production. If I decide that I want to fight this COVID war, and I'm going to going to change the way the economy works, then I'm going to drive up the cost of everything else. So we've got lots and lots of wars, right? You've got a culture war, you've got a war on office work, you've got a war on carbon, you've got a war in the Ukraine. The war in the Ukraine has escalated, right? It's not just a war in the Ukraine, it's really a kind of a quasi-economic war on Russia.
Michael Saylor not only believes that the digital coin will regain its former glory, but he also believes that the cryptocurrency has a lot of room to grow beyond its current high point. In other words, he believes that the digital coin has a lot of potential. Microstrategy has been buying the dip in recent weeks, even though the value of the cryptocurrency that is considered to be the most popular in the world has been falling. It is currently sitting on nearly $4 billion worth of cryptocurrency, as it has 130,000 bitcoins in its vault. So do you agree with Michael Saylor that we're facing policy wars? Tell us in the comments. Also, don't forget to like this video and share it with your friends who love crypto. Also, if you want to know more about cryptocurrencies, then make sure to watch this next video on our channel. Thanks for watching. Bye.